Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to uncover the hidden truths behind the numbers. Today we're diving into a report that might sound a little dry, but what it reveals could have a big impact on Treasure Global, incorporated its potential for raising money, and some interesting shakeups in its agreements. So Treasure Global Inc. is keeping busy. On the 28th of January 2026, they've announced a pretty significant move for their company. Before we jump into the details though, if you're finding value in our straight talk on corporate filings, make sure you hit that subscribe button and ring the bell. Also, we have a fantastic Discord community linked below where we discuss these kinds of insights all the time, so consider joining us there. Alright, let's get right into it. The big news here is something called an at-the-market offering agreement. Think of this as a way for the company to sell its own stock directly to investors over time to raise money. They've teamed up with a company called Kingswood Capital Partners LLC, which will act as their sales agent. Now, this isn't a one-time big sale. This is an ongoing arrangement where Treasure Global Incorporated can sell up to a whopping $10,085,000 worth of their common stock. They can do this whenever they need cash and market conditions are right. This is done through a registration statement, meaning they've already told the US Securities and Exchange Commission how they plan to do this. It's all filed and approved, allowing them to essentially tap into the stock market as a flexible source of funding. So how does this actually work? Kingswood Capital Partners will do their best to sell these shares for Treasure Global Incorporated. And there are a lot of conditions. The company, meaning Treasure Global Incorporated, gets to decide when to sell, how much to sell, and even at what price within certain limits. This gives them a lot of control. They aren't forced to sell any shares at all. It really depends on what's best for the company at that moment and what the stock market is doing. Now, of course, this service isn't free. Treasure Global Incorporated will pay a commission of 2.5% on every share sold. They'll also have to cover some legal fees for the sales agent up to $50,000. And there are the usual back and forth agreements about indemnification, meaning if something goes wrong, who is responsible. But it's not all about raising money. To raise another interesting development here, Treasure Global Incorporated had a management consultancy agreement with a company called Astute All Advisory. Limited, this agreement was originally signed back in October of 2025. Now fast forward to the 30th of January 2026 and they've signed a supplemental agreement. What does this mean? Essentially, they've removed and deleted a specific part of that original consultancy agreement, clause 4.5. We don't know the specifics of clause 4.5 from this filing, but the fact that it's been completely removed suggests a notable change in the terms of their advisory relationship. Everything else in the original agreement stays the same. Now let's really look at the bigger picture here. This at the market offering is a smart move for a company like Treasure Global Incorporated. It allows them to raise capital without the immediate pressure of a huge stock offering. They can be flexible and react to market conditions. This is particularly useful if they have ongoing projects or need to fund growth initiatives without disrupting their stock price too much with a large sell-off. It suggests a company that's looking for steady growth and is financially prudent in its capital raising strategies. The supplemental agreement with Astute All Advisory Limited is a bit more cryptic. Removing a clause completely can mean a few things. Maybe that specific service or condition is no longer relevant. Perhaps there was a disagreement about that particular aspect, or it could simply be an administrative update to better align the agreement with current business needs. Without knowing the details of clause 4.5, it's hard to say for sure, but it's definitely something to keep an eye on, especially if Astute All Advisory Limited plays a significant role in the company's strategy. Looking at the signatures at the end of the report, we see Carlson Thal, the Chief Executive Officer, signing off on this filing dated the 3rd of February 2026. This confirms the report is officially submitted. So what's my take on this? Treasure Global Incorporated is positioning itself for flexible financing with this at the market offering. It's a sign of a company that needs consistent access to capital to fuel its operations or growth. The modification to the consultancy agreement is a point of intrigue. It could be a minor tweak or a signal of a more significant shift in their advisory relationships. Overall, the company seems to be actively managing its financial and operational agreements to best suit its current trajectory. The key risk here is that the company might be signaling a need for continuous funding, which could dilute existing shareholder value if not managed very carefully. However, the opportunity is to successfully fund growth initiatives and achieve their business objectives. Alright, that's our breakdown of Treasure Global Incorporated's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think the at-the-market offering is a good move or a sign of trouble? Let us know your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the corporate world. And don't forget to check out the Discord link in the description to join the conversation. Thanks for watching. See you next time.